This is Eric Mother with Mother.com. Let's take a look at the markets here for January 24th, 2020. Markets slightly down. Alright, so as a follow-up to my recent analysis over the last couple of weeks, so the main thing here is really depends on whether we're going to get the market holding or staying above 69.1, which would be bullish. This is the monthly chart. I should have mentioned that. So that's the monthly, and the big picture still remains the same. As long as the S&P 500 is holding above 69.1, then this market should continue being stable to bullish. That's the big picture. Now, if we go on and drift and stay below, in other words, if the market cannot sustain that level above 69.1, then look out. That's not a good look. Will not be a good look when that happens. Now keep in mind, even on the weekly chart, the market continues to hold above 69.1. So the weekly still very strong. Now something I should add here is, generally speaking, when the market has held above 69.1, that generally is not the high. So what generally happens is the following. We drift lower, come off the 69.1 level, try to move again, and then we fail. In other words, we make a lower low. Generally, that's what happens. Now, while this is happening, so we make a lower low in the future, the prices actually, after a shallow pullback, make new highs. And that's what gets confusing. But in doing so, now we have the formation of negative divergence. In other words, generally speaking, whenever you see a market hold above this level for a while, it means there's going to be a higher high down the road. In other words, since this is a weekly chart, it means we're going to have to make new highs in the weeks ahead, even with a pullback. That's generally how it plays out. Now, if we take a look at the daily is coming off the 69.1 level right now. So might explain why we are seeing this shallow pullback as of right now. And again, even here on the daily, we've held above 69.1 for a significant, past month or so. In fact, going back to November, we've been holding above 69.1. So which means, again, generally speaking, you tend to have this move where you have a pullback, new highs, pullback, lower highs, and it is that negative divergence that sets the stage for a meaningful pullback. In other words, even the daily suggesting at some point we are still going to have to make higher highs in price. Now, visually speaking, it would be similar to this period here, where we make a new high with lower technicals. Now, that negative divergence from a small sample set gave us the pullback that we see here. In fact, we can see the same thing here. We try to make a new high, but there is a decline in the RSI, and again that negative divergence set the stage for another shallow pullback here. So there's a lot of work that the bears have to do to break this market. And as I've been holding and maintaining this view that even with a pullback, this market can easily find support at the 50-day moving average. Even with a severe pullback, this market can easily find support at the 200-day moving average. So the bears have a lot of work to do. It's going to take time and effort for this to actually break this current bull run. Can it break here now? Yes, it can. But for it to really grab hold and for it to really see a market that goes down, then the first order of business would be to break the recent RSI lows. As I maintained in the last video, this would need to break first and foremost if this market is really truly setting the stage for a massive pullback or the beginning of a bear market. This has to break first and foremost. Take a look at the 2-hourly, and on the 2-hourly we are seeing a slight negative divergence. Again, this sets a stage for a pullback of some sort. See prices here. The slight decline. Again, this is a small time frame. But the key takeaway, in my opinion, would be what happens now that we are coming back to test this recent RSI lows line. And I can argue here that we've already seen the break of that line and a back test. So hour to hour, this market is still pointing down based on that failure to hold back above the blue line. But the true test in the small time frame is whether or not this line holds right here. So this is the line to watch down the road. Bears would want to see this market break significantly below this line, signaling a market that has lost momentum, while bulls will be encouraged at some point should we come back around here and bounce. I should have mentioned that on the daily, there's also another line that should give us some indication of what to expect. This line here, recent daily lows. This would have to break. The bears would have to break this line if this market is truly about to collapse. And of course, the line connects recent lows. Visually speaking, it would be similar to this period here, where we break down and we get a pullback of some size here. Of course, even with a break, doesn't mean that the market would be collapsing, because we can always find support at the RSI 50 level. We found support here for the lows right there, and the market would go on to record substantially new highs. So this is something that is going to play out in time. Really, you can never tell the magnitude of a move until it comes. For example, visually, you don't know how big of a pullback we'll get until we come here, and what happens around here will determine what the market does next. If the market comes here, what happens around here will determine the magnitude of any drop. You can't tell those things at the highs. And to summarize again, as long as we are making, or as long as the market is holding above 69.1 on the weekly and on the monthly, any pullback is still going to be shallow and short-lived. Momentum continues to be to the upside. And again, based on the fact that the RSI has been holding above 69.1 for some period of time, it means that we are going to have to make a move low at some point, but still with a higher likelihood of higher highs down the road. Why? Because generally speaking, holding here does not give you the highs. The highs come with some type of negative divergence. We haven't seen that formed yet. In other words, the bulls, are still in control. It's going to take some energy. Can we be staring? Could we just be staring at all-time highs? There might be highs in the market for a generation, potentially. But for that to happen, and it can happen on the monthly chart, especially as we come closer to the end of the month, it can happen if the S&P 500 fails to hold above 69.1. So if this fails to hold above 69.1, if the S&P 500 rolls over and cannot hold above 69.1, especially on a month-to-month basis, if this does not take place, if we fail, then watch out. Be on the lookout for a massive bear market. But right now we are holding above 69.1. So guys, the bulls are still in control. This is Eric Moore with Mother.com. As always, good luck, peace, and blessings. ESPX.